Super microcomputer stock is one of the most benefited from the rise in effectiveness of artificial intelligence. It's already up more than 80% this year. But where will super microcomputer stock be 1 year from now? That's an interesting question to answer, one that I'll aim to do in this video. So let's take a look at the details and let's answer where we think super microcomputer stock could be.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
One of the estimates and assumptions and numbers that I'm going to need for this video is its current stock price. And right now, as of this recording, Super Microcomputer is trading at $523 per share. Additionally, I need Super Microcomputer's price to earnings ratio, and as of this recording, it's trading at a price to earnings of 41. You can see how the valuation has increased in the recent year as the company has started to benefit from the growing demand of its AI solutions. In its most recent quarter, revenue increased by 103%, while profits increased more than even management was expecting. So they are now starting to see the benefits of the rising effectiveness of AI. In fact, if you look at their trailing 12-month revenue, you can start to see the slope of that revenue increase start to grow upward, right? It's starting to look like it's going straight up, and 9.25 billion in the trailing 12-month revenue. Management is expecting this to continue. They've talked about how this isn't just a fluke. It's not a one-off thing. They're investing now to increase their capabilities so that they can serve the growing demand for its products. So its prospects look really good. And if we look at Wall Street, they agree that the prospects look strong. Earnings per share is expected to increase to $20.90 in fiscal year 2024, which ends in June of 2025 for Super Microcomputer. That's going to be a more than $2 per share increase from the $18.39 it's expected to deliver in fiscal year 2023, which ends on June 2024 for Super Microcomputer. This was already a huge increase from its previous fiscal year. So that growth has continued, and Wall Street and management both think that these expectations, these earnings growth are going to last longer term. And if you think about the total addressable market for artificial intelligence. According to Statista, the total addressable market for artificial intelligence is expected to grow to $1.85 trillion by the year 2030. That would be up significantly from the $207.9 billion in 2023. Artificial intelligence is popularized by large language models like ChatGPT, but there are more applications like driverless car technology, recommender systems, and more. The companies that stand to benefit from the growth in this AI surge is companies like Amazon, Nvidia, Alphabet, Microsoft, and more. Investors getting in today could realize exponential returns from investments that capitalize on the growing effectiveness of artificial intelligence. Looking at that massive opportunity, you can understand why Wall Street and management is optimistic about super microcomputers' revenue and profit prospects going forward. So now that we have some of the numbers that we're going to need to make this forecast, let's look at its estimate, bringing it together with the price to earnings ratio and coming up with an estimated stock price. So if SMCI does deliver the $20.90 earnings per share as is expected for their fiscal year 2024, and the price to earnings stays the same at 41, the stock price could rise all the way up to $856 per share. Now, that would be a huge increase from the $523 per share it's currently trading at. And after all, the stock is already up more than 80% in 2024. So another huge increase I'm not so sure about that. I would not be so sure that its price to earnings will stay at 41. I expect the price to earnings will decrease because if you look at its price to earnings history over the last 5 years, 41 is exceptionally high, way above where it was before. If you look at the last 5 years, it's traded at a valuation between 12 and 24. It's now way outside of that range. And admittedly, it's justified, right? Because the rising effectiveness of AI is leading to a huge surge in its profitability and its revenue. So it deserves to be trading at a premium to its history. But this much of a premium, I would say, is a little too much. So let's get some more conservative forecasts here. What if its price to earnings were to fall to 35? That would mean the stock price could rise to $731 per share. And that would still be a nice increase from the $523 per share. But what if the price to earnings were to fall to 30? That would mean the stock price could rise to $627 per share. If the price to earnings was to fall to 25, which would be the higher end of the previous 5-year range, that would mean the stock price would be relatively flat at $522 per share. So now that we've seen 4 different scenarios, 4 different price targets, let me share with you which one I think is the most probable, the one that's most likely in my opinion. And I think that's the one with the price to earnings around 30. I think this is the most probable valuation for Supermicro Computer. I would think 30 or below, 30 to 28 as a price to earnings multiple for Supermicro Computer stock. And that means I think the stock price could be ending the year somewhere between $575 per share and $625 per share. That's my best guess for where I think Supermicro Computer's stock price could be. But again, this is an unprecedented surge in revenue and profitability for the company. So I wouldn't be surprised if I was too pessimistic on the outlook. I wouldn't be surprised if I'm wrong and the stock price goes much higher than I am forecasting because of that unprecedented surge in demand from the artificial intelligence boom. It's just been now spreading. It started with the few companies around ChatGPT, Microsoft, Nvidia, and now it's spreading broader, and more companies, more enterprises are investing in their AI capabilities. So it looks like this trend is here to stay. The massive market opportunity over the next decade, like I shared with you, is fueling growth in this industry. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.